Hey guys, welcome back to today's video. So today we are going to be talking about DOL, or in the full form, draw on liquidity. Okay, so what is draw on liquidity? Okay, so draw on liquidity, or in other words, is our target. Okay, so whenever we are opening the charts, the first thing which we should identify is where is our draw on liquidity. Okay, where is our target which we want to aim for? Okay, and one simple way where how you can identify where is your draw on liquidity is using swing high, swing low, okay, and using fair value gaps. Okay, fair value gaps, I've not made a video about it yet in this channel, but it is one of the most important aspects and one of the most important concepts which I use in trading. Okay, and I will be explaining about that later. So let us find how you can use draw on liquidity in the market, right? So it's very simple. Okay, for you to find out where is your draw on liquidity, the first thing you need to know is swing highs and swing lows, because this liquidity lies in swing highs and swing lows. Okay, so whenever you open a chart, you can see, okay, you can go from the higher time frame, you can just mark out the swing high and the swing lows. Okay, so this right here, this is our current draw on liquidity. Okay, you can see price is already almost reaching this draw on liquidity. Okay, and then you can even mark out the swing lows, okay, right here. So these are our external draw on liquidity. And if you look at our internal draw on liquidity, this can be our internal draw on liquidity. Okay. When this is our, these are swing high and swing lows, which I am marking right now. So this swing high and swing lows are what we use to get our draw on liquidity. So you can see, you can see in this chart example, market has been going higher. So the draw on liquidity in this case is the swing high. What is it here in the swing high? It is our buy side liquidity. Okay, and these lower lows are our sell side liquidity, right? Now, once we get to identify this draw and liquidity, it would make our trading much more easier because we know where we are going to aim for. Okay, like now if you look now you have marked out that let's say when price is at this level, we know that we are going higher. Okay, we know that we are going to continue higher, and as you can see, we have a candle break. We have a CB1 over here. Okay, so this is our CB1. Okay, so when price broke this CB1, it made a retracement until the 50% level. Okay, you can see this is how we can calculate using this is how we can calculate retracement using Fibonacci. This is one way, or the other way which you can use as how we refer to the first video is by looking at CB1 or DB. Okay, so for us to find the retracement in this uh, in this example, we have to go down the lower time frame, because in the higher time frame there was no CB1 happening. Okay, like we do not know why price reversed from this area, right? So now let us look into the lower time frame to see why did price reverse from this area. Well, because there was a CB1 over here. Okay, there was a CB1 here. Let me just delete this for now first. So we have a CB1 here. This CB1 in H1, we can already identify why did price stop at this area. There must be a reason why price stopped here. Okay, and if you look here, if let's say we mark out all the swing high and swing lows, we can see that price swept this low and started going up. So this is one of our liquidity levels. Okay, okay, let that, just keep it here. Now let us find out another reason why price stopped here. Okay, so we have a CB1 over here. So we can pull our Fibonacci right now, and we can see why did price stop here, because this is a 261 level which is overlapping with this swing low. So we already know, by the time before price had reached this level, we could sense that we could already we can make a forecast, make a we can make a prediction. Okay, but we are only going to react after seeing how the confirmation price gives, right? But we can already make a forecast that price has a potential to retrace from this 261 level, which also overlaps from this swing low. Okay, and if you look at it, this is also known as an order block. Okay, and we will be speaking about that more in the coming videos on what is an order block, but let's just stick to 261 level right now. 261 and the swing low. we can see that this is a 261 level which overlaps with a swing low, right? So price, what did it do here? Price respected this level and it formed a CB1 to the upside here, right? So this could have been a good entry for us because now we know why price retraced at this level. Okay, it's not random. Price retraced from 261 and it formed a nice CB1 here. So this could have been our entry right here. Okay, at this the level which broke the CB1, the level which price broke the high. Okay, so we could have put an entry here targeting a 1 to 2. Okay, and in this case this 1 to 2 is nicely below this draw on liquidity. Okay, this swing high, this buy side liquidity which we have. So this could have been a good entry for us. All right, on when was this? On Monday, last Monday. And this is how we get to this is how we can profit once we know what is our draw on liquidity. The only reason why we took this trade, because we know that we are going to continue higher. Okay, because after this, let me just mark out this as, let me just current interval only. We can just put this all into this as, okay. Now you see here, now we know why did price retrace from this level. Okay, we know why, because there was a swing low over here. In H4, in H4 we can see it's just a shadow, but in H1 we could see that this is actually a swing low, right? So now we could see why did price retrace from this level. Okay, so, and because we know that price, this is our draw on liquidity, this swing high right here is our draw on liquidity, we could target for price to hit this level. Okay, so this is one way how we can use draw on liquidity in our trading to make profits, okay, and to enter high probability trades. So I hope you guys got some valuable understanding on draw on liquidity in this video. So till the next one, then we will see you guys in the next video.